panel discussion, we'll be kind of discussing fintech globally and then Europe versus the US. And we're kind of joined by three great founders of companies, both in the US and in Europe. So Warren, who's the founder of Empower, Jordi, who is the founder of Finteca, and then Aitor is the founder of Fintonic. I'll give a quick background of myself at the end, but Jordi, do you want to just give a quick, slightly longer form background of yourself to kick it off?
I won't take that much time. Actually, I grew up in Spain and moved to the States, and I spent most of my professional career there in fund management, traditional one, and investment banking. Moved back to Europe and then got into entrepreneurship. I launched a challenger bank, and then I joined Finteca to pivot. It's a digital mortgage broker, upside down from what you think in the States how a digital mortgage broker should be. There's still tons of fun, and now we're making it grow in Spain.
Thanks so much, Jordi. And then Aitor, great to get a sense of your background as well.
Yeah, so my background could be, it's kind of a fintech. I'm a telecom engineer, and then I spent first part of my career working on the IT world, then took MBA, and then I went to the dark side of the management consulting for another 8 years. I reached 1 million miles on my card. I stepped down of flying that much, and I founded a small lending company, and then we merged that with Fintonic. We are currently probably the largest fintech in Spain, also operating in Mexico and Chile.
Thanks so much, Aitor. And Warren, would be great to learn a little bit more about you. Sounds like you're already familiar with the SPC team.
Yeah, thank you. I'm the co-founder and CEO of Empower. We are one of the challenger banks here in the US. Our take on the world is there's a lot of people building a better checking account, and they're doing a great job. We're trying to solve access to credit. About 2/3 of millennials are considered subprime. In this country, that typically means financially irresponsible, and that's not our experience. So we have built better lending products and advanced products. We underwrite differently, and then we help people graduate and matriculate and give them access to the traditional financial system. Prior to that, I was a partner at Sequoia Capital. And when we kicked off Empower, I was hanging out at the Commons for about a year in the early days. So had a fantastic time.
Awesome. It sounds like you were one of the early members, actually. And so I have, I guess a couple of things. If folks have audience questions, feel free to drop them in the chat at any point, and then we can go and chat through them. And then I have kind of just phased this in terms of 3 kind of fairly broad topics that we might cover. And then I hope we'll have a little bit of time at the end for just broader Q&A. So kind of first broad topic, fintech innovation globally has been accelerating in different pockets from Asia all the way to Europe. And I would say the Europe was actually US was actually a laggard. Curious, how do you understand what to build for your market, and where are there new and differentiated opportunities? Warren, it would be great to kind of get your perspective on this as to how you kind of saw this opportunity in the US.
Yeah, so we got going around 2016, and back then neobanking hadn't kicked off here. And we kind of did the reverse of what had been happening in e-commerce, where we looked globally at what was going on in Europe, in India, China, and also Brazil. And you saw the neobanks and challenger banks taking off. And so we wanted to take a crack at that here because we thought pain points were very similar. There's huge, 40, 50% of the population here deeply disenfranchised with banking, and the system hasn't really changed since the Great Depression. It's a huge opportunity. But we then needed to localize it. Fast forward, it's really come, I mean, we've taken it in two forms. We started off thinking we would build a better bank account. And frankly, we lost a bit of that race. Chime did a phenomenal job and they crushed it. And we went back to the drawing board and we said, let's look at the data on what's going on with our users. And we did a lot of work based on data and survey work. And it was very clear to us that, again, this concept of building a better checking account was nice, but the bigger prize here was these bigger issues and systemic issues such as lack of access to credit, people being paycheck to paycheck, lack of financial literacy. And so by building products on top of a bank and a banking platform and a checking platform was how you would actually solve the bigger pain points and win at the end of the day, both do more for the consumer and make a material difference, as well as win from a commercial point of view. So a lot of it was grounded in the data, the APIs we have now, like Plaid, et cetera, give us so much access to data to innovate. So that's really sort of our story, sort of through experience. Broadly though, I would just say also as an investor in the space, there is just so much opportunity in both fintech and insurtech, US or globally. I mean, there's probably, I probably invest in 4 or 5 new, as an angel, like companies in the space per year right now. And I think innovation is going to slow down, and you can basically, there's literally a couple of trillion in market cap that's still up there to be disrupted. And so you can kind of just look at some old companies in the space, do the hard work, get out there and understand who their customers are and what their pain points are, or look globally at the solutions people have brought elsewhere, and there's a good chance you can localize it here as well.
Thanks so much, Warren. And then curious, like how you might have thought about what is the entry point versus the longer term roadmap that you want to kind of build out in consumer fintech. It does seem like many folks are starting from one place, but kind of over the long term converging around user pain points.
Yeah, I mean, it's our goal was to try and start more small. So, our wedge today is that we offer a cash advance that is an instant underwriting for a user of between $50 and $250, where there's no interest and no financing charges. And that's this really important wedge where there's a high pain point on the user side, that the users earned their money, they're financially responsible, but it's a couple of days before often their payday, and they're going to get what they've earned, and they need to put food on the table or gas in the car. And basically there's very few options for them right now, and it's sort of a failure of the financial system as it is today. And that's sort of, so it's a very impactful wedge for the consumer, and it's a great way to start off a relationship because it's lower customer acquisition costs than trying to get somebody to open a checking account, and it's it's a high trust transaction that you build. And so now if we do that well, we can frankly build a big business just doing that. But there's a lot of opportunity to use that as a stepping stone into a checking relationship or a long-term lending relationship or an insurance relationship or something else over time as well. And so it's really a limit of your ambitions at that point, I think.
And I Tor, curious, kind of along the same point, you've also approached consumer fintech with a personal financial management and lending perspective. Curious how you arrived there and what the future might hold for us, how you guys are thinking about the opportunity in the Spanish market.
Yeah, I think we came in from a different angle. I think the company was originally founded to solve a problem that we had ourselves, which is how to manage your own personal accounts. So the company at the very beginning was similar to what the Mint could be in the US. Remember Mint, and that was finally acquired by Intuit. So it's going to help the users manage their money, see how much they're spending in each one of the categories, and help them have a unified view of all the accounts, have alerts, make your own budget. So help people it was a product even for ourselves to help to manage your money. You don't need to do that on an Excel every single day, which is kind of a pain. And it suddenly, what happened there is that it happened two things. One of them is that you start to see that you were building some trust with some of the users, and they start giving you that access to that data and accessing the service on a daily basis. And that you realize, well, there are thousands of people that really need this and they really want this. And the second angle that came up is that what can we do with this pile of data? And it was clear that using the data for personal loans was the best usage that you can leverage. And at the same time, it was a very high demand of that service in the country. And we are now doing exactly the same thing in Mexico. Our position there is that we are somewhere in the middle between what a bank could do and with a subprime lender could do. In this country, at least in Mexico, is very similar. If you're a good client and have a good score and everybody knows you and the bank knows you for quite a long time, you can get a pretty decent loan. But if not, next step is somewhere in the subprime world. We're trying to keep or occupy that space in the middle. What's the key to occupy that space in the middle effectively? Is data. It's the only thing that can help you to provide a loan to those users at a decent pricing. We don't do small loans. We do, our average is like $8,000 US. So it's kind of second-hand car, or it's a small refurbishing of the house, that kind of tickets where we are comfortable. And the basic there is building the trust and effectively using the data. And those are the two key elements that we found that they are driving our success.
And both Warren and you have actually mentioned a couple of things as general themes: customer input and looking at the data of both existing customers and the broader opportunity. Curious, like from more of a customer feedback and how that informs your roadmap. Curious, like what your process looks like.
Well, I think it's a combination of two things in our case, and on the feedback side. Everything that, we have 70, 80,000 accesses every single day, and we know nothing about those guys. We cannot talk to them. We cannot ask them whether if they like it, if they understand the product, if they want more, if they want less. So absolutely everything is based on data, and we are spending a whole ton of money and time and resources to understand the behavior of those users. So that's what big chunk of what we do from a feedback perspective is look and obsessively look at those data to fully understand whether what the product you're serving, the guys understand it, they use it, they want it, and so on. And the other thing that we're doing literally is walk on the streets. We really need, we have some teams with a t-shirt, and they just go in the streets and talk to the people of the same segment that we are addressing to really understand whether if that, and we're doing that as we speak in Mexico this week. And it's amazing the valuable feedback you get from a 5 to 10 minute conversation to a very targeted individual where you have the time to talk to him and understand their fears, their needs, why would they use it, why they wouldn't use it, and so on. It's amazing what you learn from direct contact in these times.
And Jordi, curious, how did you arrive at thinking about mortgages from a digital perspective in the Spanish market? So
I bought and sold 2 houses in the States where it was a quite seamless process. You go to the mortgage broker, they tell you, okay, kind sir, kind lady, you can afford 500K, except now where you have to have 500K and 500 in cash to outbid everybody else in the market because it's so hot. But then I was hearing the stories from my buddies here in Spain that they went to look at apartments without knowing how much they could afford. And I thought that was nuts. So and I realized that that's how it worked here. So when we moved back to Spain, I was like, okay, there's this business that is digital brokering, but nobody looks at it from the point of view of how to get access to loans. So I wanted to run it the US way. Then, of course, you realize that the banks don't let it happen that way. So we tried to solve the pain points and figure out where the pain was. And the pain points for consumer was lack of visibility. And I can share the lack of visibility consumer have on multiple lending criteria from the banks. And from the realtors' point of view was they never knew how long it would take to close the transaction. So what we tried to do is empower the realtor, the bank, and the consumer, so triangulate to empower them to get more visibility in the transaction, give the customer more options to get lending from different banks, and get the realtor visibility in how the process is going, so there's less frustration on all sides. So we want to eventually morph into more of a US model where we can pre-concede or pre-approve loans. But for right now, we're getting enough volume to make sure that we can actually upend the traditional way of fall in love with an apartment, and then run, try to secure credit.
Thanks so much. And I'm curious how each of you have thought about underwriting. As that is kind of core to each of your business models, and the kind of incumbent underwriting models don't seem to have necessarily transitioned to empower customers. Curious how, Jordi, you've kind of thought about it on the mortgage side where it's a little bit more esoteric.
I spoken to some of the guys in the States, and it's a different pieces. We're in the States, and Warren probably knows this better than me, but in the US, you can segment from origination, warehousing, there's the mortgage broker, there's a lot of fees that you can split around. Whereas in the mortgage rates in the US are now 2-ish%, if I'm correct, 3-ish%. In Spain, we're seeing mortgages sub 1% fixed for 30 years, which is almost impossible for a bank to make money on those terms. So underwriting is difficult because mortgages in Spain and most of Southern Europe are loss leader for the banks, where they make money in other products like insurance. So underwriting and issuing warehousing for a small player right now is impossible. So we have to find other ways to do the credit scoring in the most efficient way to secure the best available product for the customer. Underwriting right now is still a nice dream, but it's not a reality.
And how do you?
I was just going to say, yeah, quickly on our side, like, you know, there's very deep and historical underwriting here in the US, which is good if you've got tons and tons of history, but it's still deeply flawed. Like the fact that when the way it works, the credit bureau gets an update once a month from the bank, let's say your credit card company, and they're not even getting the update if, you know, my credit score, having never missed a payment in my life here, will drop 100 points if I run my utilization up on one credit card north of 30%, because what gets reported to the bureau is not whether I've paid that off, but just what my balance was on the statement tape. And so what we've seen is, you know, again, with the access of data, you know, a lot more data like Plaid, we can do a, you know, very broad cash flow underwriting, which is very important for the subprime, you know, people who don't qualify today. And you can look at things like quality of income, velocity of spend, etc. And that's extremely powerful for smaller dollar loans. And then on the other side, it's also products. The fact that the way that the loan products are structured here in the US, where you offer credit to somebody. Now, let's say you're a single dad or a single mom, and you're drawing down credit. Your life's crazy. When you draw down $500 or $1,000 of credit here, and you don't have the savings muscle or the, you know, this sort of any track record of savings, to then pick an arbitrary date in the future when you're going to start repaying, that person's not going to automatically go and start saving for the first time in their life on that date. So building in mechanisms which, you know, automate the repayment and automate the success of what's going on are also really important. So for us, there's a data element to it. We also get the data from when people have used our app and make ongoing repayments, or we give people a pathway to have access, even if they don't qualify today, if they take certain steps. But it's also about how you innovate on the product side, at least here, because there's been so little innovation in the standard loan structure for a long, long time.
Adding on to what Warren is commenting, it's funny how regulations work and how customs work in different countries. I can go to my bank and request a 30,000 euro called $40,000 consumer loan to go on vacation, no questions asked. To buy a 15,000 euro car, it has to be underwritten by the bank, and I need to go in person to argue with them. So it's things like that that are puzzling. So innovation has to be there, and the market is what the market is, but the regulation doesn't say that the person actually has to actively look at the file to issue credit. There has to be a risk mechanism, but there are ways that it can be done better. And people like Aitor are looking at how to make those loans much more efficient than currently is in the market, that's for sure.
Yeah, absolutely. I think there are two sides of this coin, right? It's the user side, and in that case, I'm very into behavioral economics and that kinds of theories. We spend quite a lot of time on that. Is working on how does the user feel? What are the fears when he's taking a loan? Because everybody has fears when they take a loan. I want to be able to pay. What happens if I'm not able to? And we work a lot with that. We work a lot with anchor points. We work a lot on behavioral economics to fully make life as easy as possible and as clear and as transparent, because the willingness to pay of that user probably or partly is defined at the moment of he signs for the loan. So we spend quite a lot of time with the guys in the, in psychology and so on, try to really define an excellent experience. we work a lot trying to find some data ourselves, so we don't need to ask a customer each one of the data, because that's again a pain. We ask no paperwork, absolutely nothing. 100% is digital. Even in a country like Mexico, 100% of what we do is digital. Digital signature, digital ID, digital, absolutely everything. And that really helps a lot. I think it makes a difference if you look at it from a behavioral economic perspective. The other side of the coin is that you need to look at it with the eyes of a risk guy. To whom am I lending? And in our case, it's a lot of a very, I think, sophisticated, advanced analytic-based modeling. And we have fraud modeling. We have risk modeling, behavioral economics model, behavioral, because when we use a service very similar to Plaid, so you can download up to a year history. There are many, many things that you can find out if the guy is paying the gym, or if he's paying insurance, or if he's paying whatever, or he's aiming to save and so on. So we heavily invest on that. And there are not many people that put their money on the model. And if the model says green, we give the money. So that's kind of and it's paying out. You know, we're making money. We're making a lot of money with that. So it's but obviously you need to take those risks, and you need to really, you know, believe on what you're doing, test it in small sizes, and when you find a way, just go for it.
Thank you so much for kind of providing insight on how each of you are kind of thinking through underwriting, which is very tricky as you kind of think about taking balance sheet risk and where to pass on that portfolio risk. Kind of switching gears a little bit, curious how you guys are thinking about kind of organizationally setting expectations, how to think about stress and mental health, both in the realm of obviously working during COVID for really the past year, but also within Finteca. It is very competitive over the last several years and continues to see massive amount of investment overall. So how do you kind of think about expectations, growth, and how to run a great team and organization? Perhaps to start off with Warren, curious to hear how you're thinking about this with Empower.
It's a very interesting question. We've had we've seen it with a few employees where, you know, folks have over the last year have reached out and said, hey, I need to take a break, or I'm feeling overwhelmed. And in addition to, you know, quite a number of team members, because we have a globally distributed team who've been in areas where, you know, they've been impacted personally or with their family by COVID as well. So there's a few things I'd say. One is we make it very clear that if anything like that happens, you take what you need. And we've, you know, suggested to people that they not just take time off, but take a sabbatical or what have you if they need to take a break. The second thing is we've been very focused on the connective tissue of the organization while we're remote. And we've now also, by the way, made the commitment to be fully remote in perpetuity. And so we've had to take a lot of those elements of the human connection and how do we do that, you know, remotely. I mean, one very simple tool we have, people might use it, is we have this little widget donut within our Slack, which automatically creates random coffee conversations for everyone every week. And it's mandatory, unless you're on vacation, what have you, that you continue to build that connective tissue, and where we set aside time for those human interactions, which are really very much about our culture and culture building as well. So I'd say that's one balance. The other balance, frankly, is, you know, one of the best ways to motivate people is with having a great time. And it's really fun when things are growing and growing well. So, you know, to be honest, the other side of this is, you know, it's an amazing time to be building in fintech right now. but many companies are doing better than at any time in history. And so the flip of it is it's really, really fun and rewarding as an employee, especially at an early stage company, because you're going through that high growth period. You have lots of responsibility. You've usually got a lot of opportunity to make mistakes and take on a lot more, as much as you want, in terms, because there's always more to be done than what we have capacity to do, and so people have an opportunity to step up. So it's the nice thing is it's on one part there's a lot of intrinsic motivation as things are going well for people who really want to have an impact. The last thing we do is we always tie it to the consumer. And I think that's part of the culture. Like when we do make a mistake, it's how we handle ourselves when we do make a mistake with our users. And so that last part of mission is really important to why people are doing what they're doing. So anyway, it's tying it to the mission. It's fun because it's high growth, and then you've got to keep the connective tissue. I'm still exploring other ways to do that. We want to bring everyone together in person for a big week of that connective tissue once we're allowed to. And when people are having challenges, we really again try and reach out. We encourage people to take a break. We have to, because again, selfishly, one is we really care about these people, but it's just better for your business as well that people are recharged and they're not going to burn out or reject because things are too hard.
And Jordi, curious how you've also been kind of thinking through similar challenges and opportunities to kind of rethink how you operate.
So the last year was crazy because by mandate from the government, real estate agencies had to shut down all of Q2. So our business was basically on ice for a quarter, and our lead time is 90 to 120 days. So my Q3 was also not pretty. So our sector came back to life essentially early September of last year. And we had to reject the team. We basically were fully remote 7-8 months. And then the team said, hey, we'd like to go to the office 1 day a week, 2 days a week. We miss the camaraderie. It's like, okay, it was a team decision to go to the office 1 or 2 days a week and see how it was. They don't want to go back to fully at the office. There's full flexibility. You have a little kid, or you have a sick family member, or whatever it is, or you have doctor's appointments, it doesn't matter. You work from home. It's your choice. But they decided to do it, and we're trying to make it fun for everybody. It's about celebrating the victories and also celebrating when things don't go well because we put in the effort. But I'm going to be an engineer here and refer to Venn diagrams. At the end of the day, it's fintech, and we know that it has to be intellectually challenging, which right now fintech definitely is. It has to be fun, and there has to be enough compensation. And if those three align, the team is happy. And victories we've had was the one 2 weeks ago, we got a package to the office to one of the team members from a satisfied customer. And we celebrated on the team Zoom call, and the poor young woman it wasn't red, she was purple because she was so happy that she got something from a customer that was so thrilled. And that for us made the world of a difference. And it was funny because now there's a competition to see who gets the next box. It was completely surprised from a happy customer. That's why the customer is king. And everybody says it, but when a customer does that for one of you, that helping get the product and help him get something, it was just an unbelievable feeling for the whole team. And you have that vibe going to the office that they're having fun. It's very, very strange, but the team sees that we're growing, they're having fun, everything is working at a time where you see that other parts of the economy, other people are not doing so great. So they also feel that it's in their power to help people find a home they can afford. So all that just keeps the ball going, keeps the ball growing. It's been a very, very rewarding experience for everybody. So we're relishing the moment, and we continue pushing, and it is a ton of fun.
How are you thinking about how all this changes after folks are back in the office, or kind of post-COVID, when maybe there is a sense of normalcy, but perhaps work will always be a little bit different?
Work will be different. I mean, I was in favor of remote. I mean, if I'm at the office and I need to do concentrated Excel work or write, there's always somebody like, hey, I have a question. Hey, you have 5 minutes. Hey, there's a coffee. unless you have a do not disturb sign in front of you, it's very difficult to get that concentrated time. So if I have to, or when you have to pitch to investors all day long, you need to extract yourself from the office or book a conference room. So there will be a part of that. But I think people have come to appreciate, and I think that a lot of companies have realized that employees are not only productive at home, some are actually a lot more productive when they feel that empowerment. You empower your employees, give them responsibility, and they will deliver. It has to be a match, employee to company and company to employee. Sometimes the company is wrong for the employee. It's not that the employee is wrong for the company. It has to be a match both ways. So I don't think it's going to change. But for us, the consumer has realized that now you can shop online, and some people that are older have realized they can go online and shop, and it's comfortable and convenient. So they're discovering that they can get financial products online, which getting a financial product online is a huge leap of faith for a lot of people. In the US, you get a credit card when you sign up for college, you get a Frisbee or an exchange or something, but still getting a loan online is still a leap of faith. Getting a mortgage, which is a huge purchase online, is a big leap of faith. But hey, it was convenient. I got the best offer from 3 banks. Now I tell my friends, and it's noble. So it's that getting that normalcy into that financial product, I think, is the future, and people see that way.
And I'd curious how you've been thinking about operationally managing your company and how that's changed over time as well.
Yeah, I think it's a very relevant question. I would say it's as a founder and as a CEO of a company. And I was just remember in one of the lectures, I think it was at my time at Stanford, probably was Bill Barnett, the professor at the time, talking about the sense making as the ultimate role of the founder. And I think that's what I do most of my time is sense making. Is why on earth each one of these individuals wakes up 8 a.m. or 7 a.m., switches on his laptop and devotes 10 to 12 hours to work in a company for what you're doing. Why on earth is he doing that instead of doing anything else? And I think it's part of a role as a founder to just make that sense making that what the guy is doing and each one of those individuals, it makes sense. It makes sense for him, makes sense for the clients, and makes sense for the society overall and the community. And that's what we devote a whole lot of time trying to align and make sure that that is happening. And that at that point, we realize that people are a lot more productive. I'll give you an example. It's Mother's Day on Monday in Mexico. We are making an interesting discounts and so on because of the Mother's Day. But the first thing we did is just send a present to the mother or each one of the employees. They have to feel that we really care about them. Genuinely, we care about them. And I think that is, in our case, making a big difference. So there's a sense of why I work on this and everything is aligned. And that is, I think, helping us a lot. From a pure operational perspective, we are still remote in most of the cases, but we are trying to bring the team to the company quite often. What we have done is separate in 2 different activities. We have teamwork and individual work. People now currently, at least on our team, they don't accept to do individual work at the office. Individual work, anyone can do it whenever they want, wherever they are located. It's their stuff. But we're trying to bring the team together to do teamwork. And that's a lot of discussions, and it's a lot of board and design thinking and the whole thing. We truly believe that that needs to happen sometime in a physical space and in a physical moment, because it's a lot more effective. I'm traveling to Mexico next week, and I call the teams. So Monday is going to be this guy, this team, Tuesday, Wednesday, everybody. Every single day, there's a team joining us and having those discussions. I think that on a post-COVID basis, people will not accept to do individual work at the office, but I think they will accept and willing to do teamwork at the office with their colleagues and putting them in a single time and space. And that's how we are proceeding.
And thanks so much. I heard Christina asked a great question, which curious about the dynamics and differences of fintech markets in various countries in Europe, and why your respective companies haven't yet expanded into more European countries, or if they're planning to.
In my case, there's 2 reasons. First of all, it's critical mass. We're not big enough to tackle another market yet, so that's the easy one. The second one, there's very big differences between Northern Europe and Southern Europe. In Southern Europe, the market is very similar as far as the general market for mortgages and mortgage lending and how the system works. Northern Europe is a different beast. Northern Europe's much more similar, especially the UK is almost a clone of how the US market works for mortgage lending. On the flip side, there is different regulation in every country you go to for credit and lending, especially for mortgages. It's different in France versus Spain versus Portugal, unlike in the States where it's essentially very, very similar state by state. So yes, we have plans to expand to Portugal, France, Italy, and Greece would be the most natural markets. LATAM is very, very appealing, but it's another different regulation that we are not familiar with. So I'm not going to speculate what market will be the most natural fit for us. But if I can share some pointers in Mexico, we'd like to take a look.
No, absolutely agree. I'm probably oversimplifying here, but asking for a loan is similar, but it's not. It looks similar, but it's very different at the end of the day in each one of those countries. It's not asking for a taxi. It's a different game. And financial services, unfortunately, they don't travel very, very well. And you see that. Who are the champions in each one of the countries? Who are the champions in Italy? Italians. And who are the champions in France? France banks. And in Germany, German banks. And in UK, UK banks. And in Mexico, Mexican banks. Now they were bought by Spaniards, but it's just because of an M&A. There's not been any build-up of those institutions. It's very difficult. Probably Nubank is the only one who's trying to do so in an effective way, but it's really very challenging. And the services don't travel, financial services, at least on our side, because of the regulation, because of the competition, because of the behavior of the user, they don't travel that much. And unfortunately, Europe is a bunch of 27 countries, different regulations, different languages, and different everything. So it's very, very challenging for us. We've been looking actively to European countries, and we decided to go to Mexico. We thought it was a significantly higher opportunity across the ocean, rather than trying to conquer France and then Germany and then Italy and then Netherlands and so on.
The other point, adding on to what Aitor said, I spoke earlier this afternoon with a European VC who has invested in one of our competitors from Northern Europe, and he's lining up a call between the CEO and myself, and we don't have an issue with that because he knows I'm not going to go to his market, and he knows he's not coming to my market. So we're happy to share what we like, what we don't like, how things work, and basically we both have shoulders to cry on remotely. So that's something that can happen here, which is perfectly fine. And if I may go on to the next question, the impact of Brexit on my business has been limited to a degree, but we've seen less British citizens trying to buy real estate in Spain. There's been a slight change. There's been less demand due to uncertainty of how it's going to work. And as far as competition, as far as hiring, there is more companies that are trying to set up in Europe versus the UK, and we're seeing Spain is a cheap talent market. So we're seeing a lot of companies setting up remote dev hubs in Spain and tech hubs in Spain. Perfect example I have at home, my wife is the head of finance for a British company that has operations in Spain. So we're seeing how the market is evolving.
In that case, the Brexit did have some impact. Our banking service provider was based in the UK, sorry, they had to move to Ireland, and it was kind of a mess in that process. And then I think there is some impact on the capital markets. We found that we do securitization to most of our loans. We are now building a 200 million fund. It's going to be built in London because that's where most of the capital market works in this continent. And it has some impact. Now the regulation is different. Now you have to go through a different process. So from a raising capital perspective, specifically if you are raising debt, and it's been issued under UK legislation, it's kind of it's not helping, to say it easily. It's not helping to us. It's making everything a little bit more complex than it used to be. It's nothing that it's definite, but it's another step. Another step you have to overcome, unfortunately.
Sorry, I always forget I'm muted. Thanks so much, guys. And kind of curious, how are you thinking about frameworks for testing, techniques, products, new and emerging technologies as part of your businesses, where you're kind of directly interfacing with customers?
So could you just state the first part of that again?
How are you thinking about frameworks for testing techniques effectively across growth, product, customer feedback, changes to your product?
In our case, one of the key hurdles we have to clear for speed of the process is to integrate directly with banks via their APIs. Very few banks have open APIs where we can connect to get a credit score to approve or deny the loan. The OKKO is just not there. So that's something we actively try to push and try to integrate with. We're starting to have enough volume where banks are actually allowing us to do testing and opening their APIs with them to integrate with them. So we're seeing that process. But at the end of the day, what we're trying to see is what is the biggest pain point of all parties involved, which is speed of the process. And that's what we're trying to solve. That said, you have to be very careful, because whereas before it was less onerous, now with GPRD in Europe, sending data for customers anywhere is very, very challenging. So we have to be very careful on both sides, and the paperwork involved it's quite nightmarish lately.
And Warren, I was just curious how you're kind of think through it and apply it at Empower.
So this is like, am I thinking about this right? Like sort of testing, a little A/B testing and driving. Yeah. This is a really interesting point. I'd say on one hand, right now, there's so much low-hanging fruit for us and stuff to get right that we're not doing a lot of what I'd call like the last mile optimization. So there's fewer A/B tests than I would imagine like a later stage company. There's just still so much, like, again, low-hanging fruit to go and build and make better on the product as it is today. We do a lot on credit model, though. That's certainly an area where we do, and it's all, we actually home grew it, like the solution. It's a lot of our own sort of, because we test different credit models at the same time, and so we're holding out, putting people in different sort of buckets and watching performance, and then doing our own statistical analysis on that. We do some, like in our funnel and what have you. Again, though, we haven't, because of privacy and a few other things, we actually haven't used a lot of tools. A lot of it's just been very homegrown. And so we'll do split tests. Because one of the biggest challenges we had was normalizing. When we're doing it on customers, especially, we have so many channels that people come through from customer acquisition, and every channel performs differently in the funnel. Is the other thing, whether somebody's come in with a lot of context, they tend to have very high conversion in the funnel. Some of them have very low context, and you're educating them, and so in your funnel, and so you see a much higher drop off. But the initial cost per install might have been literally a fifth, so you can stomach that. And so what we also found is we have to try and run them simultaneously and normalize, like try and take the channel part out, which was probably one of the most complicated pieces. So we typically pick 1 or 2 steps in the funnel at one time and run a few sort of randomized A/B tests or ABC tests. But we tend to do it homegrown in the specific of how we run that piece. There's not a lot of off the shelf we use specifically for testing. Is that the question you were focused on? Yeah, cool.
And for context at Robinhood, what we had done was build out an experimentation platform that we called Kaizen, for rapid iteration. And then we actually made our own internal structure very back-end driven as opposed to front-end changes. So that just allowed us to iterate much more quickly and test and understand customer feedback. We also had the strange situation where for many companies, revenue and growth metrics are a good thing. For us, that's wasn't necessarily the case, as we did not want to incentivize bad trading activity for customers. And so there's always a little bit of a catch-22 in how we have to approach opportunities to drive customer engagement.
Yeah, our apps are fully native, but the steps we have, we typically have a web experience for the AB page, and we run, so then we can run it all off the server just for that single like step in the funnel, and then we can, without pushing any changes to any of the platforms, we can run stuff just using server flags and what have you, and then we dump it into our own database and run our own analytics on it.
And Aitor, curious how you guys have thought about this as well.
I have to admit that we are probably not the very best ones on this. I think there's a lot of room to improvement, and we do a ton of it. I think it was kind of a hype, the A/B testing. Everybody in the team does A/B testing, but I think that we honestly don't understand the outcomes. It's very difficult to really make a good test. And in fact, we hired someone coming from Amazon, and he did help us a lot to improve how we do that. My understanding of this is it's half art and half science. So there is an art on how you design the test and what do you really want to try and what you really want to understand. And then the other half of it is tools, is data, is analytics. Just go through it. I think we're kind of missing a bit of both parts. We do a lot of, for instance, we do a lot of field testing before we launch a project. So we build a very small prototype on the iPhone, and the team goes on the streets, and we ask on the Starbucks, and we ask people to help us with the design. Are they understanding? Is this what they're looking for? You just observe them, how they behave with the product, and there are many learnings that we get from there. And then once that we go beyond that step, and it's cheap, it just it requires time, and it requires people that go down to the, I don't know, to the Starbucks, to the whatever place that you can chat with someone for 5-10 minutes. It's enough to get a good sense of are they understanding the process. You get a sense that nobody reads the screens anymore, that they just go to the next, and nobody's reading. So there's lots of learning in there. And then once the product, we go beyond that step and the product is launched, it's this combination of the UX guys deciding what we need to learn, and then run the tests. I don't know. There was a very clear example a couple of weeks ago regarding the anchor point. We were putting a not very good anchor point in the mind of the user when he was asking for a loan at the very beginning. And then 8 steps later on, he was not signing because he had in his mind that he can get 15K, and then we are offering him 8. And the guy was, and most of the users, we had a very long signature ratios, and it was not on that screen. It was 80 screens before that we had put a wrong anchor in the mind of that user. Those are the kinds of tests that you really need to run. And in my view, they're complex and you need to devote a lot of time and resources to do that properly.
We have a slightly different challenge, which is our conversion time is 90 to 120 days. Our average conversion time is 100 days. So the data shows up very, very late. So there's a lot of directional guesswork that has to be put in place before things happen. And we also know what channels convert and whatnot. So our experiments tend to be very, very microdosed in order to avoid bad results, obviously, given the time, because we know that if a customer comes from a real estate portal, the lead conversion can be as high as 300 days later. So we are not going to invest 10K, 20K a month on marketing for a test that's going to happen 300 days later and get the results then, because by then we could have spent 300K in marketing and it could be a complete fiasco. So we do the A/B testing on smaller, very, very small doses, essentially microdosing, to figure out whether that is the correct direction for what we were trying to achieve with the product, especially with the sales, of course.
Thanks so much, everyone. And then a question from Christina and other folks. Curious for your views on development crypto blockchain and how it might impact your business. Is that relevant for any of you, Warren, Jordi, or Aitor?
And in our case, the figure in most of Southern Europe, for I think in Mexico as well, is the for the property. There's a registry like where the land deeds are, like Historia de la Propiedad. I don't recall what it's called in the United States, but that could be digitized. Right now, most of it is still in books and annotated in pencil. I kid you not. So that could be definitely digitized and put on blockchain where you would know property X in this location belongs to this person and the deed has been transferred to this bank and the deed has been released from the bank, or the note, there's a note against it from the bank. That could be done. Is it going to happen soon? I don't think so. But there's ways that can be done. And also for the mortgage part, especially, or the lending part, there can be loans put on blockchain for traceability of who owns the loan, how much is owed, etc., in order to sell the assets, be it MBS or ABS.
And then
For us,
Warren, oh, sorry, go ahead.
Yeah, most of our customers, in terms of like from the consumer point of view, most of our customers aren't doing that, at least. And if they are, it's probably not something that we want to encourage because it'd be very speculative and they probably shouldn't be doing that from the consumer point of view. Obviously on the flip side though, it's great for customer acquisition, but I still don't think we should do it because people like, if you look in the fintech apps right now, everyone, like most of the top 20, they're all these crypto apps I've never heard of. I do think I'm very interested outside of what we're doing as it comes to like the global payments and money movement and again, accessibility. So I'm much more involved in like as an angel investor and what have you in promoting it. And I'd like to do more. I think there could be a lending opportunity where we take this is the financial regulation challenge, but once we look ex-US, like everything that we're doing on how you underwrite, how you design the product, et cetera, would actually be applicable in many countries. And it might be something where we could do an expansion by doing effectively this through blockchain and not have to deal with each of the local regulation or what have you. But that's sort of like a 12 to 24 month out piece. I haven't fully worked out how we'll do that yet.
In that case,
Now, in that case, we're not into crypto, to be honest. On a blockchain as a technology, we do have kind of thinking of a small prototype, and it's basically to pack together everything that we require in a loan. So we have all those metadata of the loan, and we are trying to build that on a blockchain. So we build a hash, and it's crystal clear what was the data based on what we decided to take the loan. And it's a video selfie, and then it's PDF file coming from the bureau, and it's an XML, and then it's a JSON and a bunch of things we put all together. We have a hash on that, and that is going to a blockchain. It's a very small, simple use case. We do believe that it can help a bit. So we can prove to anyone that that data has never been, it's fully untouched, and it's the fully original data based on what we decided to take that risk. That's the only thing. It's a very simple case. That's kind of these small use cases that we're looking at.
Got it. I realize we're, I think, coming up on time. Any other additional questions from the audience at this point? Going once, going twice. But thank you so much, Jordi. Jordi, Aitor, and Warren. This has been super helpful for the SPC community to just think through fintech business models and opportunities.
Certainly. Can I say one very quick thing?
Yeah.
The one thing that I think people may already know this, that I think remote has opened up, is the ability to rapidly accelerate things around diversity with teams. We've seen it in a really big way where, you know, as we look at increasing participation from minority groups, San Francisco is not always the best place to go and hire there. And as we've like focus on a global talent arbitrage, like actually the majority of our remote hiring has been way more diverse. And so as you think about that, not just in terms of race and ethnicity, but more mums in the workforce because it's flexible, and they've been with kids being at home, they've been heavily disadvantaged over the last year. And so we're able to have, we've got people working like 6 till 9 and then taking a break so they can look after their kids through the day and then coming back on later and swapping off with their partners and stuff. So I would just say that as you guys think about your workforces, and one of the things that remote does accelerate, it's the ability to have a more diverse workforce in terms of thinking and talent and what have you. And it's been pretty amazing.
Fully agree. We have a Fintech and 85% of the team is female.
Absolutely.
So thanks for everyone putting this on, by the way. It's fun to hear different perspectives on the Fintech because it's often very geo-focused. So thank you.
Awesome.
Everybody.
Thank you, everyone.
Thank you.
My pleasure.
Thanks, guys.
Thank you.
Bye.